Hey, it's Clay Trader, and this will be a video chart on ticker symbol DRYS. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually today's price action broken down into 30-minute time slices. I like you with this time frame. I think it does a good job of telling the quote-unquote story of the price, and then makes mapping out levels of support and resistance a bit easier to see. I've been doing this analysis on a very routine basis. I did it yesterday. So that's where the green and red line annotations are coming from. But want to get things updated here now as the chart has made a relatively significant move as far as, technical levels are concerned. Before anything else, though, I want to first just do a little house cleaning and go ahead and delete these lines out of here. Sure, they both still pertain to the chart. They're just not relevant right now. And from a presentation standpoint, I don't want to risk causing clutter and confusion with lines all over the place. So just want to try to keep this as clean as possible. So the first update that needs to be made comes from a foundational principle in charting, which states when levels of support are broken and closed below, they tend to act as resistance. So $4.10 was an area of resistance going in, was the level of support going into today. But now that the price broke below it down here in the mid-morning time, right around 11:30 Eastern time, this would now be considered an area of resistance on any sort of bounce. Next overall area of resistance in the event the price can push through the $4.10 mark would be the 50-period simple moving average, which is being denoted there by that purple line. But no point at all at this junction in time in talking about the purple line up there, the 50-period, until the bulls can first prove themselves by getting back up above $4.10. The other big technical event that happened today, and this by no means, I don't want to come across as like this is some sort of secret discovery on my part, because that's certainly not the case, but it has everything to do with that pink line there, which is the very famous 200-period simple moving average. So that's why I say that this is not like some sort of secret discovery. I mean, it's even if you have a very basic understanding of charts, I'm sure you've heard of the 200-period simple moving average, and you know that when the price is above it, assuming you're bullish, of course, you want to see the price stay above it. And on that note, so far so good. The price came down there, and you can see temporarily dropped below, but that didn't last very long, and then the price bounced right back up above it. And so far so good. The price is indeed hanging up above that pink line, and that's definitely a must-hold level. If the price cannot hold above it, am I going to say that the entire chart's ruined? I'm not going to say that, but that would just be a sign that the bears are continuing to not only gain power, but that their power is picking up that much more in momentum. In the event that pink line cannot hold, next key level of support to keep an eye on down at $3.65. So good day for the bears. The bulls do still have a chance to build an overall higher low, and that all kind of revolves around staying up above that pink line. So we'll see if they can do that or not.
One of the biggest questions I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.